Today I'd like to take a look at market psychology using the S&P 500, in this case a weekly chart, as the subject. The sentiment and psychology backdrop has been an important component of the rally since late last year, Q4. In another video soon to come, we're going to look at the gold stock sector as well. I find it even more interesting, and something is really developing there that will allow people thinking for themselves, I think, to have a good shot at being on the right side of something that most people aren't expecting. For now, let's look at the stock market's last 6 months of history and think about the psychology sentiment backdrop that has attended the grinding rally off of the 2022 lows. As a review, back in November, we projected a coming rally because sentiment was way overdone to the negative bearish side, because there was a post-election cycle, post-midterm election cycle in play, and because we were projecting inflation fears to start subsiding, and by extension, fears of the hawkish Fed to ease. So last December, I created this chart, and as you can see, it's a little projection of an inverted head and shoulders. And at that time, I made it as a joke, obviously, but a joke to be taken seriously because it definitely had potential, given the sentiment backdrop at the time and given the need for some relief in this stock market. 2022 was a very consistent yet unspectacular bear market. We needed relief. So here was one interpretation of the potential pattern on the weekly chart. Beauty, eh? Fast forwarding to today, we find the right side shoulder was just a figment of my imagination, as I halfway suspected it might turn out to be. I was a man staring at charts after all, and pattern recognition, as they like to technically call it, is probably a little more than hocus pocus and a lot less than serious analysis, in my opinion. So your local technical analyst would call this a complex head and shoulders bottom. I just call it a mutant, an ugly looking pattern that appears bullish. So anyway, our bullish mutant has a job to do, and that is to erase the angst of 2022. I believe that its job is to, shall we say, repurpose the herds to a happy days are here again sort of mentality, to reverse all that bearish sentiment and get them FOMOing to the upside. The blue arrow at 4,700 represents an extreme, and it's not my favored projection, but we are looking for 4,300 for a few different technical reasons, and that's probably the favored area, although it would not represent a hype-filled, full-on, full bull sort of an event. So keep 4,700 in mind just in case, because there are various elements of the stock market rally that have me thinking it's quite possible, aside from the mutant pattern that wants to believe it's very possible. Technically, weekly RSI is positive and nowhere in the same ballpark as overbought. So you could call it coiled, and MACD even more so. It has crept positive, and it's looking upward. It's triggered upward, and just don't be surprised if the bull persists longer than you think it might, or longer than you think it should, or I think it should for that matter. I am bearish on the market still for the balance of 2023. However, if you'll refer back to my last video, if you've got it anywhere handy, what was the name of it? Pleasure first, pain later, something along those lines. That's what we're looking for. That 2022 bear market, that modest little bear market, is being corrected either to a minor degree or where the blue arrow rests at 4,700 to a major degree. We will put some doubt into casino patrons' minds. I think that that's a positive thing if you're bearish. And obviously, it's a positive thing in the short term if you're bullish. But just be warned that it's a counter trend move. And while I certainly have been wrong in the past and will be again, in my opinion, it's a move contrary to a deeper bear market. However, again, everybody knows it's a bear market, and this rally, this grinding thing since Q4 has a job to do, and that is to reverse the psychology backdrop, the predominant sentiment backdrop, and get them briskly bullish again. What would be the trigger? The end of war? The end of the hawkish Fed? Who knows? But the herds have been bearish. They're not all back in yet. And I do believe this rally has the potential to coax them back in, to kind of recreate the sentiment psychology backdrop to a point that is perfect for a resumption of the bear. I would just love to see some sentiment blow-offs to the upside while we hit some technical parameters, technical resistance. So to review, the herd's herd. And that sounds simple, and none of us want to believe we are the herd. But think about it. How hard is it to go your own way and not be reinforced by others, especially expert others? Okay? So, herd's herd. I can be part of the herd, so can you, most likely. It never changes. It's human psychology. And the stock market is presenting a really good case of swinging sentiment from over bearish, hopefully to briskly over bullish coming soon. What we'll be doing in NFTRH, obviously, since it is written by a technical analyst who also likes his psychology and macro indicators, is we'll be looking for all of those things. We'll be looking for sentiment. We'll be looking for technical resistance. And of course, we will be looking for the macro fundamentals and the policy backdrop and everything else all mixed together to hopefully give a good guidance moving forward for the probabilities to come. And again, I see no reason to think that the second half of 2023 will not include a resumption of the bear market. I don't say that as a perma-bear, obviously, since we projected the rally that's currently playing out. So I can say it. And there is one other little detail that I find interesting, and that is that the stock market corrected well before historical precedents say it should have. Now, of course, there are no real should-haves, but if there were, history would show that the market should have waited before it corrected. It should have waited until the Fed makes its first rate cut. And it would be unprecedented for a new bull market to spring on the heels of the little bear cycle from 2022 without the Fed even having to start cutting rates. The Fed is going to remain firm, maybe not in raising rates, but they are in no hurry to start dropping interest rates, especially with asset markets looking fine. I don't take the banking crisis overly seriously. It may develop into something, but for right now, I think it's a little bit of a sentiment afterburner. So if there is relief to come on that front, that could be what this market needs to get this bear market rally really kicked into gear. So the simple bottom line is we are on a bear market rally. We have been since Q4 2022 when we projected it. It's been a grind. It's been led by the Goldilocks stuff, as I call it, tech and tech's leader, the semiconductor sector. And it may or may not fan out to other stuff like the inflation trades, commodities, resource producers. They have greatly lagged. Maybe that could help signal the end of the bear market rally when all the sectors jump in and the FOMOs are looking for the next big thing or the next vehicle to ride the new bull market with, and they start picking up depressed entities. So anyway, that will greatly aid the sentiment profile if you want to be bearish. It's too soon now, but we're still looking for it later in the year. Thanks for listening.